A 1031 exchange, per Internal Revenue Code Section 1031, permits investors to sell real estate and trade into a like-kind property while deferring capital gains. This tool has long been used by many investors to increase their returns, reduce their tax burden, and ultimately build their wealth. The Internal Revenue Service has outlined strict guidelines for a 1031 exchange, including who is authorized to engage in an exchange. Can an LLC do a 1031 exchange? Yes. LLCs, or limited liability companies, and any other tax-paying entities are permitted to do a 1031 exchange. Additionally, when an LLC does a 1031 exchange, all members of the LLC must have an exit strategy that aligns. When some members want to sell and cash out, but others want to do a 1031 exchange, what can they do? Thankfully, there is an alternative to this situation. An LLC may participate in either of the following, depending on where they are in the sales process. Drop and swap allows investors to drop their current ownership structure, the LLC, and swap for a tenancy in common interest. The proceeds from the sale of the real estate are then distributed to individual members, which allows them to choose whether to cash out or do a 1031 exchange. Whereas partnership installment note transactions are considered when an LLC is already in escrow for a property and members have different opinions on what to do after the sale. They can either cash out or trade via an exchange. Those considering selling real estate that is held in a partnership structure are advised to prepare for the sale and speak with the appropriate representatives. Please note, Perch Wealth does not provide legal advice, and individuals should consult with the appropriate professionals about all scenarios. If you would like to learn more about a 1031 exchange and how you can benefit from an exchange, our team at Perch Wealth would be happy to answer any questions you may have. We're here to help you strive to achieve your investment goals. Contact a member of our team today or visit perchwealth.com for more information. This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.